Hey everyone, this is Ryan B. with Practical FX Trading. This is your US dollar Canadian dollar weekly analysis for the week of January 5th, 2020. Make sure to subscribe to our channel if you want to stay up to date with all of our dollar Canadian weekly analysis videos. Just click that red subscribe button in the bottom right hand corner of your screen. So I'm looking at a weekly chart for this pair. This goes back about 6 years. So super long term. But what we see in the long term is that US dollar consistently making progress over the Canadian dollar. All the way back, if we go back to 2016, we see this peak of $1.46. Currently, we're holding right below this $1.30 mark, and we've seen a lot of cooling off in this. Canadian dollar's shown a lot of strength over the last, since fall. But we've seen that for a lot of dollar pairs. Dollar's been really kind of, getting some challenges since September-ish, October, fall of 2019. But in the big picture, all that really means is that price is consolidating and holding above this $1.29 mark, really. So what we might see this week is further declines down to this $1.29 mark, but then I'm thinking it's going to be a good time for a buy. Let's go ahead and look closer. So we see it's kind of like some irregular patterns, right? So we're kind of like, in the short term, we're making new lows, but really there's support not too far behind. Where price is moving below the fast and the low moving average. So I think we could see some declines all the way down to possibly the $1.28 mark. But I do believe that's going to be a great time to buy, because if we see historically, we even go back to November of 2017, and we see around this $1.29 mark that price hesitated, even though it poked above for a second, couldn't hold, fell back below, kept testing it, broken through, then came back, resisted, rested back at $1.28. So ultimately, I think we're going to have some really good buying opportunities for the US dollar versus the Canadian dollar. Let's go ahead and make ourselves a parallel trend channel. This is pretty interesting. I could say, well, this might be a good place to buy. However, this, I'm just showing a channel here, and this is pretty untested. This line's only been tested a few times, so we could see price hold here. Because if we say, okay, this is a trend line that's got tested, we see this big bullish daily candle that pushed price back above it. So if I see, we kind of look at these different dips historically. You see these clusters of candles where price moves down, then we see a bearish turn to a bullish, so we have a confirming. So if I see another big confirmation bull candle, tomorrow, next couple of days, then even though this is technically a lower low than this, it might be a good spot to buy because we're holding on this trend channel. However, once again, price could easily come back down here and look for a buy. So, because these trend lines can be subjective and they kind of work as a zone, so, right, it's basically like scribbling. These lines up and down, up and down. Big picture though, I'm buying. So let's go ahead and look at that 4 hour again. And the 4 hour, so this is pretty interesting. This might be a good bullish signal. Price is moving above the 20, the fast moving average in the 4 hour. So now here in the past, that's done that and then quickly retreated, which of course, is a loss. However, sometimes we see it works like this, where price moves above it. Then we went from $1.3060 all the way to $1.33, right? So that's quite a few pips based on the last time that happened, right? So price shoots above it. So what we need to see happen is price start moving away and continuing above it. Because if it just stays close to the moving average, then we usually see the other trend resume. But just the look at this pattern, right? So if this zone really holds, let's make some great support, and we'll see. We kind of look at these resistance zones. So we've got resistance here. What about this $1.3180 mark? We've got some minor resistance here. So these be the, if we're buying, the next places our price will be tested will be $1.3080, $1.3180, especially here because a lot of times the first, okay, this happened, crossover, but then really we want to see price. We'll see it touch the 200, right, before resuming the other directions. So that'll be our next challenge. So if we were to hit that 3180, that would achieve that. If you're looking to sell, if you are bearish on the US Canadian dollar, I would look for a rally back to this $30.80 mark before placing a sell, because right now we're, technically doesn't look like a great place to sell, because really you're at kind of the bottom. You don't want to sell at the bottom, you want to sell at the top. So you want to look for a rally, right, where the price goes back up to the resistance, then you sell that. So maybe if price moves its way back up here to this $1.31 mark, think about selling there as opposed to selling now. That's one of the hardest things about trading, right, is patience. Can you wait? And if you don't have a lot of patience, the Forex will teach you patience. And if you really just can't help pulling the trigger, then you might want to consider placing your automated stop loss and limits, right? So your profit limits and your stop losses, and do everything automatically. Sometimes people trade better if it's hands off and they go off of analysis, just because it takes the emotion out of the game and it just puts your trading future in the hands of the numbers and your analysis, which ultimately is a constant, unlike emotions. So have a great trading week. We should see some good fireworks out of all the US dollar currencies this year. I'm anticipating a lot of volume on the Forex this year. We'll talk soon. Bye.